Hello and welcome to this session in which we will discuss audit objectives and procedures when it comes to the inventory cycle. Now, in prior session, we learned about management assertions, what management claim about their account, in this situation, inventory, existence, completeness, valuation, accuracy, so on and so forth. Now, the auditor will have to do what? The auditor will have to create audit procedures to meet those audit objectives. So we have balance sheet related objectives and transaction. So I'm going to start to list them first, and we're going to go ahead and discuss each one of them. For the balance sheet related audit objective that applies to inventory, we're going to discuss existence, completeness, valuation, accuracy, and allocation. Usually those are the most important one. We'll also look at rights and obligation, and we would look at classification. From a transaction related audit objectives, we would look at occurrence, completeness, authorization, accuracy, cutoff, classification, and presentation. Now, since we're dealing with inventory, I will be focusing more on the balance sheet related objectives. But as I explain the balance sheet related objectives, once we get to the transaction related audit objective, it's easier to understand because they are related to each other. For example, notice here completeness, existence, occurrence. Occurrence is for a transaction, existence is for a balance sheet. Valuation and accuracy, the same thing, accuracy, valuation, and allocation. So they are similar. So I'm going to cover the balance sheet related objective a little bit more in depth because inventory is what we're concerned mostly with the balance sheet, with the balance. And for the transaction, I will go over them briefly. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
The first one we are going to look at is existence. The existence assertion, the audit related objective is existence. Well, key assertion, what's the key assertion is this? This is important. Inventory is an asset. I hope you know this. And when it comes to asset, our main concern is existence, not only for inventory, for all assets. And the primary audit step here is physical observation of inventory. Nothing better than seeing in your own eyes that inventory exists. In this situation, we are going to monitor the physical observation. Matter of fact, this topic is so important. We have one lecture specifically about the physical observation of inventory. So the audit procedure here is observe inventory in the warehouse. How do you do that? Look at the recording, evaluate and test the client count procedures. Now you want to look at the observe, evaluate how well they are doing, test the client count procedures. Yes, you do some counting and you have to test, and you have to perform independent test counts. Why? Because you want to make sure the asset that they are claiming, it's indeed there and it's there at the appropriate quantity. Here we want to make sure, the goal is to ensure recorded inventory actually exists. Existence. And this is the most important assertion for assets. If procedures are reliable, the auditor can conclude on the existence of inventory. What will be an example of this existing assertion? For example, an auditor visits a manufacturer's client warehouse, and there's a tag that shows 50 units of part A123 on shelf B5. What would the auditor do? What is a tag? We talked about the tag in an earlier session. A tag, it will show you how many units, the description, where are they located, the conditions of it, so on and so forth, detailed about the product. So you're going to pick up those tags and you're going to see if that physical presence of those 50 units on shelf B5 matches the recorded location, and confirm tag details match inventory record. This is how you will verify for existence. So the goal is to confirm that inventory recorded in the books actually exists, and nothing more important than that when it comes to assets. Also, we want to look at the completeness assertion and have audit-related objective and ensure that all inventory on hand is included. Everything is complete. Everything is recorded in the financial statements. What is the audit procedures here? Verify all items have count tags. Well, we counted for everything. We have a count tag. We traced everything. Traced tag numbers and test count to the inventory compilation. That's what we have to do. Confirm inventory held on consignment or in public warehouses. If we have anything on consignment in public warehouses, we want to confirm it. And we talked about this when we talked about physical count. Sometimes we're not comfortable. Sometimes we don't confirm it. Sometimes we want to go there and test it ourselves, depending on how comfortable we are. But make sure we are accounted for everything. An example would be, during an audit, the auditor notices several pallets in the corner of a warehouse without tags. What does that mean? Upon inquiry, the client realizes they were omitted from the count because they have no tags. We did not count them, therefore they're not on the record, therefore inventory is understated. Now the auditor ensures that these items are tagged, counted, and added to the inventory record. Make sure they are there. Otherwise, the risk is if we don't do it, inventory is understated. Now usually that's not the case, but it could be an error. So the outcome of this completeness is to ensure inventory records are complete and accurate. Accurate deals with valuation allocation. We're going to talk about this here. The goal is to ensure inventory is recorded at the correct value and the amount are accurate and properly allocated. What's the audit procedure here? Well, vouch cost to vendor invoices or verify standard cost. Well, what do we have to do? We say, okay, that's what the cost is. Vouch this information to the vendor invoice. Make sure it matches. If this is our cost, it should show in the vendor invoice. Perform lower of cost or market test on key items to make sure it's properly reported. Identify any absolute slow-moving or excess inventory. Why? Because there could be a problem with obsolescence. Invest large book to physical differences for misstatement. If there's a huge difference between the dollar amount between the book and the physical account, we have to investigate. An example would be at Best Sporting Goods, auditor test winter jackets held past season. Why do they want to do that? Because they want to confirm prices were marked down, because this is from last season, to liquidation value. Also, they want to review procedures to identify any outdated merchandise and verify any write-down were applied. Again, what are we concerned with? Valuation, accuracy of this merchandise inventory. So the outcome inventory value reflect economic reality to enhance the financial statement reliability. Rights and obligation of inventory. Here we want to confirm the entity actually owns the recorded inventory, because you could be holding inventory for someone else. Usually rights are important here. Audit focus, exclude inventory that's held on consignment. If we're holding the inventory for someone else, it is not our inventory. Therefore, we don't have the right to it. Therefore, it needs to be excluded. Segregate bill and hold goods from inventory count. When someone buys inventory from us and they ask us to hold it, and there's a legitimate reason why legitimate reason for the buyer, because maybe they don't have a room for their inventory, so therefore it's bill and hold. When it's bill and hold, we also have to be careful not to include this, and that inventory will have to be segregated. For example, an auditor reviewing inventory at year end discover goods stored in the warehouse but owned by a third party on consignment. Out. We should not be counting this. The auditor ensures that these goods are excluded from the inventory record. Also, goods sold under bill and hold terms are confirmed to be segregated and not counted. Again, the overall is inventory legally owned by the entity is the only inventory that's recorded. Now, when it comes to obligation, if there's any loan against this inventory, we want to make sure we're aware of it. But let's take a look at this multiple choice question from farhatlectures.com. Which of the following is considered the most reliable procedure that provide the most assurance concerning the existence of inventory? So we want to make sure that inventory exists. In your opinion, what is the most reliable procedure? Let's take a look at A. Written report from a specialist. Well, yes, written report of a specialist will tell us that, it will tell us more about the inventory, whether that inventory is good or not good, the value of it. But can we have the assurance that it actually exists, that we have it? What if this inventory don't exist? Would a written report help? It does not help. It does not help. So A, I would say A is not a good answer. Choice B. Observation of the physical inventory count. Hold on a second. I'm there. I'm observing the inventory. Is this a good way to make sure it exists? I would say, yeah, between A and B, definitely I'm going to stick with B. C, confirmation of inventory from custodian. Do you really want to trust this over B? Here you're confirming the inventory from the custodian. Between B and C, yes, the custodian can tell you anything. How would you verify? So between B and C, I'm going to keep B. Inquiries to inventory personnel, that's even worse. Inquiries talking to them, at least confirmation you do it on paper. Inquiries, you're just asking them, so it's even D is lower than C, so D is out. So observation, indeed observation of physical inventory count is the best way, is the most reliable procedure to provide the most assurance about existence. Matter of fact, it's so reliable that in my course, I have one whole session about how physical inventory is counted. I have one whole lecture in the inventory chapter, in the inventory cycle, how it's counted, because it's that important, because it verifies existence, and existence is important for all assets. Inventory is an asset. What should you do now? You want to go to Farhat Lectures, look at additional resources, multiple choice, true, false, lectures. Whether you are an accounting student, CPA exam candidate, invest in yourself. That's the best investment you can make. Good luck and stay safe.